All right, so are you ready to dive deep? Today, we're tackling DeFi, decentralized finance, a world built on blockchain. And it's shaking things up.
It really is.
I've got a stack of articles and research here, and
Yeah.
frankly, some of it is mind-blowing. But is it all hype, or is there real substance here?
Well, what's fascinating is that DeFi isn't just some techie pipe dream. It's a direct response to real pain points, that people have experienced with traditional finance. Like, think back to the 2008 financial crisis, the lack of transparency, accountability. It left people feeling like the system was rigged against them. DeFi emerged from that frustration, offering a potential alternative built on trust and openness.
So it's like the Wild West of finance, but with the potential to be more inclusive and equitable. I remember once trying to send money overseas, and the fees were outrageous. Not to mention the paperwork. It made me wonder, there's got to be a better way, and maybe DeFi is it. But I've also heard some pretty scary stories about security risks and scams. How do we even begin to make sense of all this?
Well, we start by understanding the building blocks. At its core, DeFi relies on blockchain technology. Imagine a giant digital ledger that tracks every transaction, and it's completely transparent. Anyone can see it. It's virtually tamper-proof, and it cuts out the need for those middlemen who traditionally control the flow of money.
So instead of relying on banks to verify transactions, we're relying on this immutable blockchain. It's like having a public record of everything, which actually makes me feel more secure, not less. But how does it actually work in practice? If I want to lend or borrow money, how does that happen without a bank involved?
That's where smart contracts come in. These are self-executing contracts written in code. Let's say you want to lend someone some cryptocurrency. A smart contract would automatically handle all the details. Interest rates, repayment schedules, everything. It's like having a digital escrow agent that guarantees both parties fulfill their obligations.
That's amazing. It eliminates the need for lawyers and all that paperwork. But what about security? We hear about these DeFi hacks all the time. How can you be sure these smart contracts are foolproof?
Well, no system is entirely foolproof. But the DeFi community is very focused on security. Smart contracts undergo rigorous testing and auditing to minimize vulnerabilities. Of course, there are still risks, but remember, even traditional banks get hacked. The difference is with DeFi, everything is transparent. You can trace every transaction and see exactly what went wrong, which helps to improve security over time.
So it's like open source security, where the community is constantly working to identify and fix vulnerabilities. That actually gives me more confidence. Okay, so we've got the blockchain foundation and these amazing smart contracts. But what can you actually do with DeFi? What kind of services does it offer?
That's where it gets really exciting. Think of all the services you get from traditional finance, lending, borrowing, trading, even insurance. DeFi is building decentralized versions of all of them. And it's not just replicating the old system, it's creating entirely new possibilities.
Okay, now I'm really intrigued. So give me an example. If I want to trade cryptocurrencies, how is that different in the DeFi world?
Let's look at Uniswap, one of the most popular decentralized exchanges, or DEXs. Unlike traditional exchanges that rely on centralized order books and intermediaries, Uniswap uses something called an automated market maker. It's basically a pool of liquidity provided by users, and algorithms determine the prices of assets based on supply and demand.
So it's like a peer-to-peer marketplace for crypto, completely automated and transparent, no more shady brokers or hidden fees. That sounds pretty revolutionary. But wait, what about those wild price swings we always hear about with crypto? Doesn't that make DeFi incredibly risky?
Volatility is definitely a factor to consider. That's why stablecoins have become such a crucial part of the DeFi ecosystem. These are cryptocurrencies designed to maintain a stable value, usually pegged to a fiat currency like the US dollar. One example is DAI, created by the MakerDAO platform.
DAI. The digital dollar. It's like having a bridge between the traditional financial world and this new decentralized frontier. So I can use DAI for everyday transactions, but still benefit from the advantages of DeFi.
Exactly. It offers stability within a volatile market, which is essential for mainstream adoption. And this is just the tip of the iceberg. We haven't even touched on lending platforms like Alav and Compound, where you can earn interest on your crypto or borrow against it.
Okay, hold on. I'm starting to feel like I need a cheat sheet just to keep up.
Yeah.
You're telling me I could be my own bank, lend out my crypto, earn interest, and even access flash loans, all without a single bank involved.
Yeah.
My head is spinning.
And that's the beauty of it. DeFi is empowering individuals in ways we never thought possible. It's challenging the very foundations of our financial system. But of course, with any revolution, there are challenges to overcome.
That's what I want to explore next. We've talked about the incredible potential of DeFi, but let's get real about the risks and challenges. What are the potential downsides that we need to be aware of?
Great question. And there are definitely some important considerations to discuss. Let's dive into those next.
So one of the biggest concerns surrounding DeFi is security, specifically smart contract vulnerabilities. Remember, these contracts are lines of code, and even a tiny error can have major consequences. We've already seen instances where hackers exploited these flaws, leading to significant financial losses for users.
That's definitely concerning. It's like building a house on a foundation with cracks. It might look good at first, but it's only a matter of time before things start to crumble. So what's being done to address these security risks?
Well, the DeFi community is constantly working to improve security measures. There's a strong emphasis on rigorous auditing and testing of smart contracts before they're deployed. Many projects also offer bug bounty programs, incentivizing developers to find and report vulnerabilities.
So it's like a constant game of cat and mouse, with developers trying to stay one step ahead of the hackers. It sounds like a pretty high-stakes environment. It can be. And that's why it's important for users to do their due diligence. Look for projects with a proven track record of security and a transparent development process. Don't just jump into something because it promises high returns.
That's good advice for any investment, really. But DeFi seems particularly vulnerable because it's still so new and unregulated. Speaking of regulation, where do governments stand on all of this? It seems like they'd be scrambling to get involved.
Yeah, the regulatory landscape is definitely one of the biggest challenges facing DeFi. Its decentralized and global nature makes it difficult for traditional regulators to assert control. We're seeing a lot of debate and discussion around the world about how to strike the right balance.
It's like trying to fit a square peg into a round hole. Traditional financial regulations were designed for a centralized system, and they just don't translate well to the decentralized world of DeFi.
So what are the potential implications of this regulatory uncertainty? Well, it creates a lot of uncertainty for both developers and investors. Projects might be hesitant to launch if they're unsure about future regulations. Investors might be wary of putting their money into something that could suddenly become illegal. It's a tricky situation.
Definitely a double-edged sword. Too much regulation could stifle innovation, but too little could lead to chaos and scams. It's a delicate balance to find. But let's shift gears for a moment. We've talked about the risks, but I'm still curious about the potential upsides. You mentioned financial inclusion earlier. Can you elaborate on that?
Absolutely. DeFi has the potential to bank the unbanked, providing access to financial services for millions of people worldwide who are currently excluded from the traditional system. Think about people in developing countries who lack access to banks, or those who are unable to meet the requirements for traditional financial products.
It's like opening up the financial system to everyone, regardless of their background or location. That's a powerful idea.
Yeah.
Can you give us a real-world example of how this is playing out?
Sure. There are micro-lending platforms built on DeFi that are specifically targeting underserved communities. For example, there's a platform that's helping women entrepreneurs in Southeast Asia access loans to start and grow their businesses. These women often face significant barriers when trying to obtain financing from traditional institutions. But DeFi is providing an alternative pathway.
That's amazing. It's like bypassing the gatekeepers and empowering people directly. It's definitely a compelling argument for the social impact of DeFi. But what about the average person? How can DeFi benefit someone who's already comfortable with traditional finance?
Well, there are several advantages. For one, DeFi transactions are typically much faster and cheaper than traditional banking. Think about how long it takes to send a wire transfer, or the fees you pay for international transactions. DeFi can significantly reduce those costs and timeframes.
So it's like cutting out the middleman and all the associated fees? I'm starting to see the appeal. But I also imagine there's a learning curve. DeFi seems pretty complex compared to using a traditional bank app.
There is a learning curve, that's true. But there are also many resources available to help people get started. And as DeFi platforms become more user-friendly, that barrier to entry will continue to lower. Plus, think about the potential returns.
You've got my attention. What kind of returns are we talking about?
One of the most exciting aspects of DeFi is the ability to earn passive income through activities like yield farming and liquidity mining.
Okay, break those down for me. They sound intriguing, but a bit like financial jargon.
Sure. Yield farming is essentially lending out your cryptocurrency to others and earning interest or other rewards in return. It's similar to depositing money in a savings account, but the interest rates are typically much higher in DeFi.
Higher interest rates. Now you're speaking my language.
Yeah.
But how does it actually work? Who am I lending my crypto to? And how do I know it's safe?
Well, there are various platforms that facilitate yield farming, and each has its own mechanisms for connecting lenders and borrowers. Some platforms use smart contracts to manage collateral and ensure repayments, while others rely on reputation systems and community governance.
So it's like a decentralized lending market, where algorithms and smart contracts take the place of banks. Sounds risky, but also potentially very lucrative. And what about this liquidity mining thing?
Liquidity mining involves providing cryptocurrency to decentralized exchanges like Uniswap. These exchanges need liquidity to facilitate trades, and they reward users who contribute to these liquidity pools with a share of the trading fees.
It's like becoming a micro-investor in the exchange itself. And the more people use the exchange, the more I earn. It's starting to make sense. But with all these different platforms and protocols, it's hard to keep track of everything.
That's a common challenge for newcomers to DeFi. It's a vast and rapidly evolving ecosystem, and it can be overwhelming at first, but there are resources available to help you navigate this landscape.
Okay, so I'm starting to grasp the basics of DeFi, both the risks and the rewards. But I'm curious, can you give me some concrete examples of successful DeFi projects that are actually making a difference?
Absolutely. Let's dive into some real-world success stories. We've already touched on Uniswap, which has become one of the most popular decentralized exchanges, handling billions of dollars in transactions every day. But there are many others doing innovative things.
I'm all ears. Let's hear about these DeFi pioneers. I want to see how they're putting these concepts into practice and shaping the future of finance.
One platform that stands out is Atav. It's a lending and borrowing platform that's known for its user-friendly interface and innovative features. One of its most interesting offerings is something called a flash loan.
Flash loan? That sounds intriguing. And maybe a little dangerous. What exactly is a flash loan?
A flash loan allows you to borrow a significant amount of cryptocurrency without putting up any collateral, as long as you repay the loan within the same transaction.
Wait, so I can borrow millions of dollars worth of crypto with no collateral, as long as I pay it back immediately. How is that even possible?
It leverages the speed and efficiency of blockchain technology. The entire loan process is automated and executed within a single block on the blockchain. If you don't repay the loan within that time frame, the transaction is automatically reversed.
That's incredible. It's like borrowing money from the future and then immediately returning it. But what's the point? What can you actually do with a flash loan?
They're primarily used for arbitrage and liquidity provision, but they can also be used for other purposes, like refinancing debt or taking advantage of short-term market opportunities.
So it's a high-risk, high-reward strategy. That requires a deep understanding of the market and lightning-fast execution. Definitely not for the faint of heart.
Okay, all of this clearly pushing the boundaries of what's possible with DeFi. What other success stories should we know about?
Another fascinating project is MakerDAO, the platform behind the DAI stablecoin we discussed earlier. What makes MakerDAO so interesting is its decentralized governance model.
Decentralized governance? You mean there's no central authority controlling it? Exactly. Decisions about the protocol are made by a community of MKR token holders who vote on proposals. It's a truly democratic system, where the users have a direct say in how the platform is run.
That's a stark contrast to traditional finance, where decisions are made behind closed doors by a small group of executives. It's like the difference between a monarchy and a democracy. So MakerDAO is a successful example of a decentralized, community-governed DeFi project.
Absolutely. It's a testament to the power of decentralization and the potential for DeFi to create more equitable and transparent financial systems.
Okay, so I've got Uniswap for decentralized trading, all for lending and borrowing, and MakerDAO for stablecoins and governance. These are all incredibly innovative projects that are pushing the boundaries of what's possible with DeFi. But what does the future hold for this space? Where do we go from here?
That's the million-dollar question. DeFi is still in its early stages, and it's evolving at an incredible pace. But there are several trends that are likely to shape the future of this space.
Okay, I'm ready for some crystal ball gazing. Give me your predictions for the future of DeFi.
One trend that's already gaining momentum is the integration of DeFi with traditional finance, often referred to as CeFi.
Wait, DeFi and CeFi, aren't those two worlds fundamentally opposed?
There's definitely a tension between the decentralized ethos of DeFi and the centralized nature of CeFi. But there's also a growing recognition that these two worlds can complement each other.
So it's not an either situation.
Exactly. We're seeing more and more collaboration between DeFi projects and traditional financial institutions. They're exploring ways to leverage the benefits of both systems while addressing the challenges of regulation and security.
That makes sense. It's like finding a middle ground. where innovation and stability can coexist. What other trends are you watching closely?
Another big one is the development of Layer 2 solutions. These are protocols that are designed to enhance the scalability of blockchains by processing transactions off-chain, while still leveraging the security of the main blockchain network.
So it's like adding an express lane to the blockchain highway to speed things up and reduce congestion. I imagine this is crucial for DeFi to achieve mainstream adoption.
Absolutely. Scalability is a major bottleneck for blockchain technology, and Layer 2 solutions are essential for making DeFi more efficient and affordable for everyone.
This is also fascinating. It feels like we're witnessing the birth of a new financial system right before our eyes. What other trends should we have on our radar?
Cross-chain interoperability is another exciting area to watch. It refers to the ability to transfer assets and data seamlessly between different blockchain networks.
Right now, most DeFi projects operate on their own isolated blockchains. It's like having a bunch of separate financial ecosystems that don't talk to each other.
Exactly. Cross-chain interoperability would break down these silos, allowing for greater connectivity and collaboration between different DeFi platforms.
That would be a game changer. It would make the entire DeFi ecosystem much more powerful and accessible. But with all this innovation and disruption, I have to wonder, what role will regulators play in shaping the future of DeFi?
That's a great question, and it's one that's on the minds of many people in the DeFi space.
We've talked about the challenges of regulating DeFi, but it seems inevitable that governments will want to assert some level of control, right?
Of course. The question is, how will they do it? Will they try to shoehorn DeFi into existing regulatory frameworks? Or will they create entirely new regulations specifically for this new financial paradigm?
And how will those regulations impact the growth and innovation of the DeFi space? These are some big questions that we'll need to unpack further.
Definitely. The regulatory landscape is evolving rapidly, and it's going to be fascinating to see how it unfolds in the coming years.
It feels like we're at a crossroads with DeFi. It has all this potential to revolutionize finance, but it also faces these significant challenges, especially when it comes to regulation. So how can governments balance the need for innovation with protecting consumers in this space, in this rapidly evolving space?
Well, that's the billion-dollar question, isn't it, right now? It's a bit of a Wild West scenario. With different jurisdictions taking different approaches, some countries are embracing DeFi, seeing it as a catalyst for economic growth, while others are more cautious, concerned about the potential risks like money laundering and financial instability.
Yeah, it's almost like the early days of the internet, when regulators were trying to figure out how to govern this new digital frontier. Do you think we'll eventually see a global regulatory framework for DeFi, or will it always be this patchwork of different rules and approaches?
That's hard to predict, but I think we'll likely see a combination of both. Some level of international cooperation is probably necessary to address the cross-border nature of DeFi, but it's also important to allow for experimentation and innovation at the local level. A one-size-fits-all approach might stifle the creativity that's driving this space forward.
So it's about finding that sweet spot between fostering innovation and ensuring consumer protection. But how do you regulate something that's inherently decentralized and borderless? It seems like an impossible task.
It's definitely a challenge, but it's not insurmountable. Regulators can focus on areas where they have clear jurisdiction, like anti-money laundering and consumer protection measures. They can also work collaboratively with DeFi projects to develop clear guidelines and standards that promote responsible innovation.
So it's about building bridges rather than walls, working together to create a regulatory environment that supports both innovation and stability. But even with the best regulations in place, there are still inherent risks associated with DeFi, right? Like those smart contract vulnerabilities we discussed earlier.
Absolutely. Technology will always have its limitations, and DeFi is no exception. It's crucial for users to understand that there are risks involved, and they need to take steps to protect themselves. That means doing their research, choosing reputable platforms, and using best practices for security like strong passwords and two-factor authentication.
It's like venturing into any new frontier. There are potential rewards to be had, but you need to be prepared for the risks and take precautions to stay safe. But beyond the technical risks, there's also the issue of market volatility. We've seen how wildly cryptocurrency prices can fluctuate. So how does that impact the stability of DeFi?
Volatility is definitely a major concern. Sharp price swings can disrupt DeFi protocols and lead to significant losses for users. That's why stablecoins have become such a vital part of the ecosystem. By pegging their value to a stable asset like the US dollar, stablecoins offer a degree of predictability. and mitigate the impact of market volatility.
So stablecoins act as a kind of anchor, providing stability within a turbulent sea of fluctuating crypto prices. It seems like they'll play an increasingly important role as DeFi matures. But with all these challenges and uncertainties, why are so many people still drawn to DeFi? What's the underlying appeal?
I think it boils down to a desire for greater control and transparency. In our financial lives, DeFi empowers individuals by giving them direct access to financial tools and services without the need for intermediaries like banks. It's about cutting out the middleman and taking ownership of your financial future.
It's like the democratization of finance, giving everyone a seat at the table, regardless of their background or location. And with all the innovation happening in this space, it's hard not to get excited about the possibilities. But at the end of the day, is DeFi truly revolutionary? Or is it just a hype cycle that will eventually fade away?
I believe DeFi has the potential to be truly transformative. It's not just about creating new financial products. It's about fundamentally changing the way we think about and interact with money. It's about building a more inclusive, transparent, and equitable financial system that empowers individuals and communities. Whether it succeeds or not will depend on how we navigate the challenges and opportunities that lie ahead.
Well, after diving deep into this world, I'm convinced that DeFi is more than just hype. It's a movement that's challenging the status quo and pushing the boundaries of what's possible in finance. And I, for one, am excited to see where it takes us.
Me too. It's a fascinating time to be following this space, and I'm eager to see how these innovations unfold and reshape the financial landscape in the years to come.
So to all our listeners out there, we leave you with this. DeFi is here, it's evolving rapidly, and it has the potential to change everything. The question is, will you be a part of the revolution?
Your choice is yours. Thanks for joining us on this deep dive into the world of decentralized finance. Until next time, keep exploring, keep learning, and stay curious.